Hello and welcome to episode 33 of 11FS Spotlight. I'm Sarah Kocianski. In this show, we shine a spotlight on the best and the brightest in the tech and financial services industries to understand what gets them going, growing, and what they think the future looks like. A big part of this show is your involvement and your questions, so please do leave them in the comments sidebar and we will answer them live for you today if we can. And on today's Spotlight, I am joined by Tom Butterworth, Head of Early Stage at Silicon Valley Bank. How are you doing today, Tom?
Hey, Sarah, really good. And firstly, thanks so much for having me. Really appreciate it.
Well, thanks for taking time out of, I just opened the window to see the sun is still there. It's beautiful weather. And thanks for taking the time out of sunning yourself in the garden to join us.
If only. I'm actually in a shed at the end of my garden, so I am separated from home, so I get good overview of the sun and the garden throughout the day. So it's not a bad place to be.
Lovely view. Well, today we are going to be talking about Tom and your work at Silicon Valley Bank, as well as the impact of COVID-19 on the early stage tech space and the key considerations for starting a company in Europe now. Okay, first things first, Tom, can you tell us a little bit about what you do at Silicon Valley Bank?
Sure. So I head up early stage. So, what does that mean? So we have a team of relationship managers who are amazing, doing incredible work, who support a portfolio of companies effectively. So we work with about 1,200 early stage companies. It's growing very, very quickly. And our job is to find as many of those high growth, innovation, and life science companies as possible at pre-Series A. So what does that mean? We define Series A as a $5 million check or more from recognized investors. So our job is to find as many companies in the ecosystem that we feel will go on that journey and go on to raise Series A.
So, I guess the investment world can be a bit opaque, perhaps, for people looking into it. I don't think it's the easiest industry to understand, looking from the outside in. So I just wonder if you could give us a little bit of background, perhaps. I mean, how did you get here? Did you always want to be head of early stage for a bank, or was there a bit more of a journey behind that?
No, I think most people go on a journey. I don't know many people who, when they were like 7, knew exactly what they wanted to do and then they execute on it and end up kind of having that job. For me, I got into financial services, got into banking completely by accident. Effectively, finished university, didn't know what I wanted to do. This was 2004, so you couldn't move for jobs. It was at a time in the economy where a lot of it was fueled on bills of salt and sand and what became the financial crisis. But I feel actually really fortunate compared to a lot of young people today who are coming out of university and have much more limited opportunities. When I finished university, pretty much everyone got a job in an industry where you could earn a good living and move back in with my friends from university and try and keep that lifestyle going for a while. So that was the primary driver. And then, you fast forward kind of 3 years later, I had a totally chance encounter meeting. I was like, this is the only type of business that I want to work with now. So I was originally working with kind of more generalist companies. So everything from architecture firms to accountants to a guy who made costumes of West End musicals. And then I met this tech founder and I was like, blown away. It was one of those meetings which I still remember. I was like, you know what? Like, this is all I want to do now. So from 2007, I kind of knew what I wanted to do. But prior to that, I'd no real idea.
Yeah, I'm jealous of people who graduated even 2 years before me. I graduated in 2010, and jobs were sort of these things you heard about other people getting. Perhaps your parents had one, but they weren't exactly easy to come by.
Oh, for sure. I was super lucky.
Okay, well, let's talk a little bit now about what you actually do kind of on a day-to-day basis, what that looks like, what it sounds like. I mean, I guess perhaps we could start by doing a bit of an overview of Silicon Valley Bank. So I've been around for about 35 years. But kind of worked particularly with startups. I mean, how would you say the process there is different to other banks or even other financial services in the same industry that do similar sort of things?
Yeah, I think the key fundamental is that the founders of the bank in the early 80s chose to focus on a very narrow segment of the economy. Then they focused on high growth innovation businesses in California. And also, crucially, the funds that funded them. So, the really early days of venture capital. And I think that model hasn't really changed for SVB. And we've added a few little bits and pieces around the edges. But fundamentally, we focus 100% on the innovation economy. So high growth tech companies, high growth life science companies. and also working with the funds that fund them. So we provide commercial banking services to those companies, but we're also the biggest provider of commercial banking services to the venture community themselves. So we bank more venture funds than any other bank globally. So I think it's that kind of singular focus on the market was so important and different. And I think if you look at more traditional banks, which I used to work at one, they do absolutely everything. And by the way, they're great businesses. Like, they make incredible amounts of money and employ huge amounts of people. But they do everything for every single person. So you can go into a high street bank and you get travel insurance, and then get a mortgage, then get a commercial loan, and then get some investment banking advice. We focus just on the innovation economy. So we view that we're kind of an inch wide and a mile deep, whereas the more traditional banks are an inch deep and a mile wide. And one's maybe not better than the other, but they're very different business models.
Yeah, no, absolutely. I think there's always going to be space for different business models, whichever industry you're in. But I think with that in mind, that you kind of you have quite a quite a specific focus. I think that means that you kind of work with a few other businesses and organisations to support your clients and your customers. And one of which is I believe Modern Treasury, which we had on the show last week. So can you tell us a little bit about that partnership and why it was important for you?
Yeah, I mean, great timing. I think we announced it just a few weeks ago, so it's good that they were on the show last week. So that we're always looking to support our clients with the best-in-class technology, and we don't always provide that in-house. So where we can't provide that in-house, we'll partner with people. So it's a referral arrangement and an integration arrangement, and the role is to support our clients with their treasury functions with someone who's the best in class at it, and it feels quite similar to the relationship that we built from the UK office with Cantox to support our clients with their foreign exchange needs. So yeah, we've got a history of doing this where maybe there's a gap or an opportunity in our proposition. We're super happy to partner with the best in class to support our clients who are doing incredible things, growing incredibly quickly, and therefore have huge demands on what they need from their bank and their financial services provider. So it just made a lot of sense to partner with that great organization.
Do you think that's the main reason that sort of your customers, if you like, or the companies that you invest in come to you, is that you have this singular focus with other additional products and services on the side, or that you can deliver through partners? Or is there something else that you think is the key reason that those companies want to work with you? Because obviously it goes both ways in the industry you're in.
Yeah, I mean, I think that's part of it, right? If you're working with great people and winning companies, people want to be part of that. So that's definitely a good thing. I think some of it definitely goes back to that kind of singular focus. And if you're speaking with people from Silicon Valley Bank and you're an innovation business, that we're speaking to companies like you or investors like you every single day. That's what we do. I also think for my team and the early stage focus, it's the fact that we look at companies differently. So, and again, it's not a criticism of the larger banks, because they have their model and it's great. But if you're a pre-revenue early stage company, equity backed, heavily loss making, you're not probably going to be seen as an attractive proposition for a lot of banks. But for us, we'll look at it based on the potential of that company and say, like, actually, these guys have, some of the smartest investors behind them. The founder has been a founder before. They've got an amazing, product which resonates with the market immediately. This is exactly the type of person we want to work with. And actually, we will, wrap our arms around them from day one. So there is a banking for high growth companies, and that's what we should aspire to. So it's wrapping that service around it, but also, our network, our knowledge, opening up our black book of contacts through our day-to-day jobs, but also the fact that a lot of us have worked in the ecosystem for a good period of time. We want to try and help our clients improve their chance of success. So the aim is that by working with Silicon Valley Bank, if you're an innovation business, high growth, or a fund, you should have a better chance of success working with us than you would do with another organization.
So I guess the appeal then is partly that you are specialists, so how have you had to rethink things over the last 18 months as sort of people would come to you because you're a hugely experienced company, you specialize in this thing, you've been doing really well for 35 years. But right now, and indeed, for the last 18 months or so, people have had to rethink how they've always done things. So, I mean, what's it done? I suppose, what's the pandemic done for how you operate? And I suppose actually maybe we should start by saying, what's the pandemic done for kind of the early stage ecosystem more broadly? Have there been fewer companies? Have there been more companies? Have there been more people seeking more funds? How's the ecosystem and the environment sort of shifted, if at all?
Yeah, I mean, it's a very good question. I think we're still working out because we're still in it, right? I was actually thinking my last face-to-face meeting was actually with some of your colleagues. We had an offsite, and some of your colleagues were there, and yeah, that was like March 2020, and so it feels such a long time ago. So yeah, I mean, there's a lot of water from the bridge since then. So I think that you can look at this in stages. The initial stage was everyone was, what are we going to do? Like, so much uncertainty, because I mean, literally, like, we didn't know how things were going to pan out, but people that were getting sick, we had to all go and work from home and work that out, and a lot of people weren't set up for working from home. There was clients who, what it's like with early stage companies, they have the cash burns, they run down their cash, and then they raise. They were at that kind of cash out point, and they were due to get a check, but the investors were going, am I really going to write this check right now? So that first, I'd say 3 months, so up until June, I'd say it was mainly kind of turmoil and everyone just trying to work out, what are we going to do? And I don't think that's limited to the innovation economy or financial services. I just think everyone was in that boat, from a personal point of view as well, with homeschooling and everything else. I think as we came out of that period, there was definitely casualties in the sector, and they tended to be people that had exposure to real estate or exposure to travel, very similar to the wider economy. And there's one notable, someone who we know and love is Elizabeth Farley at Tech Hub. Sadly, Tech Hub closed down because and the situation was well publicized. The revenue wasn't there, and the landlord wouldn't budge in terms of reducing the rent that Tech Hub was paying. And it's really sad they went out of business, because Elizabeth's been there from the very start. She's one of kind of the founders of the ecosystem in a way. So it was, and it's actually a really important point. I think that, because I'm going to talk about how everything has kind of been up and to the right. I do think it's super important that as an industry and a group of people are focused on innovation and tech companies, and you guys focused on fintech and financial services. We've been kind of in a COVID bubble in like a good way, because what I'm about to say, but it's really important that we're not kind of tone deaf to the wider economy and the challenges that people have. And I've had friends who've lost businesses and livelihoods, and had to sell the house and stuff like that. So there's kind of real world consequences from this, which I just don't think maybe we don't acknowledge that enough. And there is a degree of kind of tone deaf, because you see these blockbuster IPOs and the amount of capital that's out there, and it's very easy to get swept away in it. So I think, going back to your point, post June, I think that a lot of organizations, ourselves included, provided kind of COVID relief for companies. So we provided a debt break for clients that were borrowing clients, so gave them repayment holidays. We reduced clients' fees for a period of time to give them just a bit of leeway just while we're all working out. But then as we came out of that, suddenly I think that there was this mass adoption of digitization technology globally. There was also an awful amount of capital pumped into the economy by governments, and some of that has filtered through to the innovation economy. And in general, everything was up and to the right and trending that way anyway. But it feels like since June last year, things have really moved even more quickly. And I think a lot of things would have happened anyway. So I think the European ecosystem was primed for rapid growth, which it has done. I think you've got the super successful founders out of Europe that are staying in Europe, that are going public, that are putting money back into Europe. You've got the amount of capital that's been raised by European venture funds, which is all up and to the right. So all the kind of the signals in terms of what supports the innovation ecosystem were going that way anyway. I think COVID was a bump in the road initially, and then we picked up where we left off kind of quite quickly. And we've seen companies raise probably more quickly than I've ever seen in my life. I've seen companies raise earlier than I've seen. I think that the pressure to get into this space has meant that private equity and some big investment banks are coming in at the top. This has forced everybody down. So you've now got funds that would never dream of doing anything pre-A are now doing seed deals on a regular basis. You've got seed investors that are doing angel size checks. So all this has helped to fuel deal flow into early stage companies. And I think the fundamental is that high quality companies will always get funded under any circumstances. So I don't think the bar has been lowered in terms of the quality. I just think there's more capital trying to find what is a growing number of companies. So from that point of view, COVID had an initial shock effect, but then after that, I think that things picked up pretty quickly and have continued to grow exceptionally. We've never seen growth like it in our history.
So it's almost like it's one of the few industries that has benefited hugely from recent circumstances. And I don't say that lightly either. I know that an awful lot of people and an awful lot of industries have really suffered, but along with, video conferencing technology, that there are some that are bound to have done well out of it. I guess, the question is, do you think that will continue? And I guess, do you think that's meant that anything's changed? You had already touched on it, but if you were thinking about starting a company now, do you think that approaches and processes should be different to people who were trying to do the same thing 2 years ago? Do you think, as you said, there's more money out there and it's coming in earlier, so should your plan be to try and raise earlier, or is it still a case of you need to think strategically about what money you want to raise, where to do what with, kind of thing? I guess the question is, do you think there's any different advice you'd give startups now?
Yeah, I think so. I think that the ecosystem has developed regardless of COVID. So even versus 2 years ago, I think that the diversity in sources of capital, the experience of investors has just changed, and also the education of founders as well. There was lots of if you go back a few years, it was a case of just like getting money. That was the only thing. I just wanted money. Now, I think that founders are looking at, well, actually, kind of what are the terms of that money? What's that going to mean for my business, 5-10 years from now? Is this someone who is here to help my business? Or is it someone who is, just looking for a tax break, actually zero interest in the success of my organization? So I think there's kind of a number of things as well that I'd advise. So I would say that the fundraising, you should absolutely do your diligence still on who you're going to raise money from. I think that you should get as many references as you can on investors. This is if you're going to go on this path of raising venture capital, which by the way isn't right for every single company. It's a minimum 10-year relationship where you're going to spend an awful lot of time with these people. So are you actually comfortable getting on that treadmill with that group for 10 years? Or do you just want to build a great business which is going to be profitable and you at some point you'll be able to sell and do incredibly well out of it? So there is always that kind of fundamental choice. I think that the impact of COVID, I'd say there's two main changes. One is, in fact, three. I'd say one is how you raise. So previously it was you do lots of meetings, lots of face-to-face, lots of travel, incredibly time consuming. You're probably more limited geographically because of that. I think now the fact that we can talk like this means that there's more optionality in terms of how you meet investors. And I know lots of companies that have raised without ever meeting their investor in person. And the thought of that a few years ago just would have been, frankly, someone would have, it just wouldn't have even been a thought to operate in that way. So I think you've got the fundraising element. You've then got the hiring environment as well, where previously, if you're a London-based tech company, generally there were exceptions and people were ahead of the curve in terms of having a more distributed workforce. But generally, people would hire people who could get into London to get into an office at 9 o'clock in the morning and then leave at whatever time of evening, get home. That's not a requirement anymore. And I think we're still all working it out, but the founders that I spoke to, the investors that I spoke to, the general consensus seems to be we're going to move to a more hybrid environment where there's going to be flexibility for people. We'll still want people to come into the office at some point. However, that means that now if I want to hire a developer in Edinburgh and I'm based in London, I can absolutely do that. There is no limitation. So I think the ability to cast the net of, trying to find the best talent is going to be a net positive from this. You do have, we don't want to go down the Brexit rabbit hole, but pre-Brexit, you would also have had the ability to cast it across the entirety of Europe. That still is possible depending on visa situations and everything else, but there is obviously going to maybe be a little bit more friction there. And then the last thing, which is linked to hiring, is obviously your work environment. You don't need to, as an early stage company, get an office with space for all your employees. You just don't need to do it. So I think there's cost savings from that. There's benefits from that culturally. There's downsides to it as well, but I think we're all going to work out how we're going to manage those over the next kind of 12 months. So those are, just three things which I think immediately come to mind, which mean this new environment is going to be different.
Yeah, I think it all sounds quite positive, actually. And for me, I just want to get your take. For me, it sounds quite positive for founders who perhaps previously would have found getting funding harder or less accessible. Just as an example, I have a very good friend who's just started a company and successfully closed some funding, which she did while she was pregnant. So she was meeting investors whilst 8.5 months pregnant. And there's no way that in the old environment she'd have been able to travel from her home to London to come back again to have full days of meetings with investors. And the new environment has meant that wasn't even a problem. It wasn't even a consideration. And all that they wanted to do was talk to her via Zoom and understand her business plans. And she successfully got that funding. I should say she's also brilliant. But I do think that maybe there's a point that a lot of brilliant people perhaps previously were excluded or cut out. And do you hope, or perhaps have you already seen maybe more diverse founders coming to you, or more startups of people with less classic backgrounds or circumstances sort of coming to you, or is that something that you would perhaps hope to see in the future?
I think we definitely hope to see it in the future. It's very easy to look at some signals and say you're seeing more females raise capital. You're seeing small increases in founders from underrepresented backgrounds in general get funding, but I think we've all got to be really honest with ourselves and say there is still an awful lot of work to do on diversity, equity, and inclusion. And we at SVB are keenly aware of that and the role that we want to play in trying to support and address that. So I think it has, maybe the example of your friend is a really good example of someone who previously it just would have been very, very difficult to have those meetings. Just from a practical point of view, I think the fact that she's clearly brilliant because she's raised around, that there would have been an investor who would have taken that leap. And I think in general, investors now are talking more and thinking more about diversity, equity, inclusion than ever before, which is a good thing. But there's still, one of the challenges that we have as an industry, and I talk about this quite a lot, is the diversity of risk. So if you are from a background where you can't afford to fail, so you're living with your parents and whatever your job is, you're helping fund, you're helping pay the rent, you're helping fund the household, you're living on low incomes. You could have, one of the greatest ideas for a business ever, but would you be able to go and take that leap to say, actually, I want to go and focus on this for 6 months and not earn any income? It's very difficult for people to make that decision. And I personally, I didn't see how they would be able to do it. So I think we have this real challenge in the ecosystem where people from privileged backgrounds are still more likely to be founders than people from backgrounds that aren't so privileged. So I think as an industry, we've got to do an awful lot of work to try and address that.
Yes, I completely agree. There's an awful lot left to do. I suppose I'm just hopeful that a lot of the changes we've seen through the pandemic continue, and we see people benefit as a result of that. Just on that note, I'm being quite optimistic for the future. But just before we finish off today, can you give us a sneak preview, perhaps, or some idea about what's next for Silicon Valley Bank?
This is like the great thing about working at Silicon Valley Bank, where it feels like we're just getting started still. So if you look at our growth rate, it's kind of very similar to a lot of our clients. So I always use, it's been a while since I've run a marathon, Sarah, but I always use a marathon analogy, which is, we're in like mile 3 of the marathon. We're just now starting to find our feet and our pace. And actually there's just so much opportunity for us, which is a total position of privilege as an organization. But we've got a geographic expansion, the market growing at rates which, we've never seen before. The maturation of the European ecosystem in general, other markets to look at outside of Europe. Because we are an EMEA business, so that's what we're headed up. So there's an awful lot for us to do. So it feels like the next 5 years are going to be way more exciting than the last 5 years.
Let's just hope there are fewer types of excitement that we're currently experiencing that involve me not being able to go to the pub. Is all I'm going to put out there. I'm completely with you, except for that bit.
I would be very happy for this to, be the end of pandemics for us.
Yeah, absolutely. But let's hope we can build on the success and progress that we have laid during the pandemic, and the resilience that everybody's developed and built. Okay, well, thank you so much for joining me today, Tom. Where can people find out more about you and everything you're getting up to?
svb.com for our US site, or svb.com, I think it's __ UK for our UK site. I'm on Twitter. I had a terrible handle from when I got into tech. When instead of using my name, I call myself @TechBanker. So you can find me @TechBanker or LinkedIn. So yeah, anyone feel free to reach out. Always happy to speak to founders. Frankly, the best part of my job is doing that.
Perfect. And don't worry, I've definitely heard worse Twitter handles than that in my line of work. Right, well, that's all we have time for this week. Do make sure you follow 11FS on LinkedIn so you never miss an episode, or go visit 11FS YouTube's channel. Sorry, this is what happens live shows when I read like this. Please do go and visit the 11FS YouTube channel where you can catch up on previous episodes. Have a great week, everyone. Thank you so much for joining us, and goodbye.